I was noticing at the end of last year that coffee was nearing a very, very strong support, one that held up since 2009. In fact, coffee had fallen back to its 2009 low and was down about 65%. And so I went ahead and made an alert and sent an alert out to all my members to buy coffee. And they bought coffee at the end of January. And since then, it's up about 45%. And I bring this up because I was talking to a private client of mine this past week, and he was at a medical conference in Puerto Rico, and there they had a financial guru telling all these doctors, perhaps a better way to grow your money. And if any of you know doctors, or if any of you are doctors, you know they are very, very bad at growing money. So he asked the crowd, give me a ticker symbol and I'll pull up a price chart and I'll tell you what I think of it, kind of what I do in speed investing. And so, the usual ticker symbols got sent up and people are like Apple, Google, Facebook. And my client sitting in the crowd answered finally, the guy on the stage says, okay, I'll take one more symbol. And he says, how about coffee? How about JO? And he pulls up JO and the whole crowd's like, oh, because, the price chart just, it looks absolutely like a ski slope on the downside, except for the last 6 to 8 weeks. And then the guy said, well, where'd you buy? He goes, oh, I bought this 3 weeks ago. And the guy on the stage said, what's your stop loss? He said 15%. And the guy on stage just started applauding and like, oh my gosh, he jumped off the stage. He ran down to shake the hand of my client and said, in all my years of going to medical conferences and talking to doctors, I've never had one give a specific stop loss and find something after it's bottomed, and just congratulations. And for the rest of the conference, my private client was like the guy. All the other doctors were talking to him. He was like the guy of the party. How'd you do that? And how do you invest? And it was just so fun to hear that story because we use price action. That's what we do. We let price action tell us what we're going to buy because it's so straightforward. Hey everybody, this is RC Peck, and this week's podcast for Fearless Wealth is a pretty interesting theme. And the theme is the Fed doesn't matter anymore, and I'll prove it. Now, most people think the Fed is the most important reserve bank in the world, and it is pretty darn important. But I want to prove to you that it may be losing how important it is with it pulling back its money printing. So look at the screen here and look at this price chart. So the price chart that I want to show you, that I want to prove to you why the Fed doesn't matter, is this one right here. And what you see on the screen here is on the top of the green line, moving up from the green line, is the S&P 500. Now, it almost looks like a mirror image below the green line of the red line. And now the red line is the Japanese yen to the US dollar exchange rate. And as you can see, as the Japanese yen gets cheaper and cheaper, the S&P 500 goes higher and higher. Now, it used to be that the Fed had to do all the money printing. But remember, we live in a closed system. We live in a closed world. We can't go to Mars or Venus and invest over there or move out of the system. We live in a closed system on this planet. So what the Federal Reserve does, or the Japanese central bank, or the Chinese central bank, or the European central bank, or the UK central bank, affects the entire investment world. And there's only one investment world on this planet. So as the US Federal Reserve is cutting back their money printing to zero, which they will do, what's happening is, I think in back channels, is Janet Yellen and before Ben Bernanke was talking to the Central Bank of Japan, China, Europe, and the UK and saying, hey, we've done enough money printing for now. You're going to have to pick up the slack. We're cutting back. And they've literally handed the baton to whether it's Japan, China, soon to be Europe, or the UK. And so with the US cutting back the money printing, I don't think it matters as much as people think. And I think that's why a lot of people are going to get caught thinking the market has to fall. And you can see here on the top of the screen that the market did fall about 5%, which is a 5% fall is not that big a deal. But people got pretty scared with it. So the Japanese yen is getting more and more worthless against the US dollar. And the Japanese central bank has come out and said, we're going to print more and more yen. We're going to get the yen, which used to be at 78 yen to the dollar. it's right around 102 yen to the dollar. And I think they want to go to 150 yen to the dollar or 200 yen to the dollar. And that money printing is going to absolutely flow into the S&P 500. And that's what's happening right now. And that's why the S&P, when bad news comes out, it doesn't really fall that much and it wants to go higher. But kind of the new big money printer in town is the Japanese yen, and the baton has been handed to them in kind of this relay race of central bank printing around the world. Now, the second price chart I want to show you is probably as important as what I'm showing you here, or even maybe more important in determining the direction of the S&P 500. And if you look at the screen here, this is the advanced decline line for the S&P 500. Now, all the advanced decline line is doing is it's measuring how many stocks are advancing higher against how many stocks are declining lower. And it's just a simple ratio. And if there's more stocks advancing to declining, the line goes up. And if it's just the reverse, the line goes down. Well, you can see the advanced decline line fell, but then it took off and hit new lifetime highs. So never in the history of this planet has this advanced decline line ever been this high. And you can see not only has it taken off, but it is just in the stratosphere. So as long as this is advancing higher, it's going to be excruciatingly difficult for the market to crash, because this shows you from a very technical, non-emotional, unbiased point of view how many shares are moving higher to how many shares are moving lower. And as long as this is going higher, that means we have new highs in front of us for the S&P 500. And this is not a morality play. This is not me saying it should go higher or it shouldn't go higher, but this is actually what's actually happening. So to wrap up this week's theme of how the Fed doesn't matter, there's more than one major money printer in the world, and it's very likely when things get bad, the Fed won't print, but the European Central Bank will print. So the big takeaway is it's not just what the Fed is doing, it's what the Japanese Central Bank is doing, the European Central Bank is doing, the Chinese Central Bank is doing, and the US Central Bank. And all three don't need to be printing money. You only need one of four or maybe two of the four to be major money printers, which is happening right now. So the takeaway, the least resistance for the market is to the upside. And I'll throw one more in. The least resistance for gold right now is to the upside. The least resistance for silver is to the upside. The least resistance for precious metal mining stocks is to the upside. And the least resistance for bonds, municipal bonds, corporate bonds, is to the upside too. So as this market is moving higher, people are getting concerned and they're actually moving more money or moving money back into the bond funds again for protection. So very interesting market we have so far in 2014. Now, final thought. Remember, we want to believe we know what's going to happen because it makes us feel safe. That's why we do research and read articles, because it makes us feel confident. It makes us feel safe. But remember, it's your strategies that determine your portfolio growth, and not your stock picks, and not your beliefs, and not your bias, and not your morality play. The market is moving higher. The advanced decline line is moving higher. The Japanese yen is moving lower. This is defining what is happening in the world right now. Let's follow price action and have a strategy that determines what to buy. Not your whims, not your biases, not your friends' articles, not the pick of the week newsletter, but what price action is actually doing. This is RC Peck at fearlesswealth.com, and really here's to taking back control of your wealth so you get the future that you deserve.